We were dead wrong expecting Musk and team to step up like adults in the room and give a strategic and financial overview. Instead, we got a high-level Tesla long-term view with another train wreck of a conference call.
And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool.
I mean, I think yesterday we got a bit of a trifecta of bad news.
I think that as in like short term, the stock is in no man's land.
Certainly, I think more investors are questioning whether Tesla is a technology company or a car company.
You can't stay magnificent with a notably lower growth rate. That's like bringing a knife to a gunfight.
All that and more. So let's get to it. When it rains, it pours. Tesla stock is currently up in the pre-market a little over 0.5%, sitting at 183.73. Today's video is going to be a little bit rough. It's kind of like watching your favorite sports team lose and then the day after going to ESPN and reliving it all over again. Why put myself through this torture? I'll tell you why. In good times and in bad times, there is always something to learn. It's easier to learn those things when emotions are riding high, the stock is soaring to the moon, but when we've reached a particular valley, when the stock market has soured on you, or when you go into halftime down by 28, it's easy to bury your head in the sand and say, I guess we weren't ready. But learning lessons here, this will prove far more valuable than when the stock is riding to the moon. Moments like this test everyone's resolve. Do you really believe, or are you just along for the ride to get the ring?
We were dead wrong expecting Musk and team to step up like adults in the room and give a strategic and financial overview. Instead, we got a high-level Tesla long-term view with another train wreck of a conference call. Dan Ives not holding back. He joins us around the table. Dan, good morning to you.
No, great to be here.
You sound disappointed.
Look, I mean, this was an important call where Musk and the rest of the team needed to step up, adults in the room, give some guidance in terms of what's happening on pricing, the margin pressure strategically. And yeah, I'd say train wreck would probably be soft because this was one where the long-term story is intact, but in the near term, they needed to navigate, communicate. They didn't do that.
What? Did I miss the earnings call or something? I'm pretty sure did I take notes? I did take notes. I've got the Elon opening remarks, our Master of Coins remarks, you know, a little bit anyway. Investor questions, analyst questions. I don't see Dan Ives here asking any questions. A lot of the problems for some of these analysts happen to be that they're not getting any specifics from Tesla. Well, excuse me, motherfucker. Have other important things to be doing, like the maturation of FSD, the building of Optimus, or building as many cars as they possibly can, while maintaining a firm grasp on the goal of 20 million vehicles per year by 2030. It's reaching for the heavens to be sure, but even if you should miss, you'll land somewhere among the stars.
Let me start with you because your reaction, the note that you sent out here this morning caught our attention in terms of some of the issues that you are raising on the heels of these results. And you were talking about the fact that you wrongly expected that adults were going to be in the room on the call. You took issue with some of the things that were said during the call. How has maybe what you've heard over the last 12 hours changed your short-term outlook here on Tesla?
Look, you need communication. What the margin guidance is ultimately going to be, how many more price cuts. And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool. And I think that was a conference call. You're going to see pressure on the stock. The long-term story doesn't change. And TASHA, I'm sure you'll agree. But in the near term, the bears win.
A new model, is that really going to spur demand the way that some investors were hoping for or might have anticipated?
Yeah, well, I think, Dan said it, right? I think that the focus should be on the long term here. And a lot of investors currently right now are focused on the short term. Hey, look, Tesla's not immune to changes in interest rates, right? But when you look at the auto industry as a whole, they are, one of the only electric vehicle manufacturers that has this profitability. And we heard on the call that they're able to reduce costs at really an unprecedented rate. You know, one analyst thinks it's over 10% a year. And they said they see further opportunity for cost reduction. So, I mean, they've cemented their lead in electric vehicles. I think if you want to talk about the next year or so, I mean, we should be talking about robo-taxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability. And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. I mean, general purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole.
Damn!
So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
Ding, 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 ding! Tell her what she's won, Johnny! Your mother. Right. TASHA KEENEY coming out the tunnel like Tom Brady. I don't give a fuck. We're down by 28. We're still gonna win this game.
And does this come as a surprise to you because the street is selling the stock down today?
I mean, I think yesterday we got a bit of a trifecta of bad news. You have the comment on deliveries. I don't think that was as surprising. I mean, we kind of could see demand has been slowing a bit. I think the margin commentary was a bit of a surprise. They talked about sort of hitting a natural curve limit on bringing costs down. It's a big problem because they just cut pricing in China and Europe a couple weeks ago. So if you can't bring costs down, those pricing just hits your margin right away. So it feels like margins are going to come down next year, very likely. And then he also didn't back away from the comment about trying to get a 25% stake, which raises concerns about dilution if you're a shareholder here.
What do you think in terms of whether it's more important to have not get diluted, or to have Elon Musk there developing AI at Tesla? How would you come down on that?
I mean, the stock trades where it does because you're not paying for the core auto business, you're paying for the future ideas, and that is Elon Musk. But it would be pretty frustrating, I think, as a shareholder to, you know, have to sort of dilute yourself to keep him around.
Pay that man his money.
He beat me. Straight up. Pay him. Pay that man his money.
This man is beating everyone in the auto industry. Tesla is actually one of the top AI plays in the stock market today, largely in part of the efforts by Elon Musk. Pay that man his money.
You've got a hold on the stock right now. 190 is where it's trading. In terms of the other big automakers, though, you like them less. Ford and GM, you have a sell on both of those stocks. Why?
I mean, I think the traditional auto, the industry is challenged right now. I think even what Tesla's talking about is right. Their demand is slowing, pricing's probably coming down. Those effects are going to affect the Detroit 3 as well. They just haven't seen it as much. So I think we have pricing headwinds. We have capacity has grown way too much, partly because of all the capacity Tesla has added. And we have EV regulation issues for the traditional guys. So they're going to have to figure out a way of trying to maintain margins as they sell more unprofitable EVs. Which is just a structural challenge for them that I don't think they're going to be able to meet.
That's a pretty bleak outlook. What would change your mind? Is there anything that could happen over the course of this year that would make you think, okay, maybe there's a time to look at it again?
Nope.
Forget the stock name. They missed on expectations around revenues and earnings. So of the 10 or 11% it's down, that's probably a third of the reason. To me, the two-thirds reason, the other two-thirds, is that when it comes to guidance for 2024, that margins, we're not sure. So Elon was being honest, but the market doesn't want lack of clarity, and also volume growth. So I think the stock is down appropriately, being the lack of positive guidance, and they missed the reduced numbers to begin with. I think that as in like short term, the stock is in no man's land. You want to see that stock base out at 180. If it can't base that, you're going to be in the 160s. So, you know, rule number one, do not buy a stock on a day like today. You have to see that flush out. As you know, I entered the stock around 120 and 150. I sold calls on some of those that got called away at a higher price. I'm just in the stock right now. I would look over the next couple of months. So I think it will be dead money over the next couple of months. Once things settle, I'm long-term bullish on the name. I think the manufacturing prowess is incredible. But right now, you really just can't touch this name because I think the sellers will continue, and the price revisions are going to continue to come out the next couple of days.
As a trader, that is very practical information. Matter of fact, I'm following that almost to a T. You can't predict what the stock market is going to do. Will it level out at 180 and then soar back higher? Maybe. It could also plummet back to 135, where I will continue to load up and place long-term calls into the future while buying a ton of stock. In my opinion, the visceral reaction from the stock market is unfounded. With all the uncertainty and fear, I have to hold on to my conviction that the individuals over there at Tesla who've weathered many a storm will be able to make good on what I think will make the company a $1 trillion company. 1, the maturation of FSD. And 2, the next generation vehicle where they've figured out a way to manufacture this thing at half the cost of the Model 3 and Y. If they do these 2 things alone, Tesla is well on their way to being a multi-trillion-dollar company. Then you want to add on the benefits of the energy division, Optimus, and any other future products that they have failed to mention on an earnings call?
Tony, I thought about you last night because your skepticism has been well telegraphed. And even a long time ago, you told us that in the end, OEMs tend to get legacy multiples. Is that what's happening here?
Certainly, I think more investors are questioning whether Tesla is a technology company or a car company.
Not me.
This quarter revenues grew 3%. Margins are very similar to other car companies.
Let me know when Legacy Auto reaches Tesla's margins when it comes to producing battery electric vehicles. Don't worry, I'll wait.
The stock is still trading at 75 times our earnings projection, 150 times cash flow. So clearly investors aren't all the way there, and quite frankly, I don't expect them to go there. I do think Tesla has some unique technologies. I think they could play out and manifest themselves in higher margins longer term. But I think for now, investors are really questioning the kinds of multiples and the kinds of extrapolated growth rates that they had afforded Tesla in prior periods.
You've been at $300 target, so are you feeling more skeptical now?
I think that, this year, I think it is actually a good setup for what they did last night. I'll turn it on its head. So, they talked about volumes not growing at that 50% and substantially lower, I think is the kind of terminology. The streets, somewhere below 20% growth rate, we're down at 16%. That gives them room to actually beat numbers this year.
What? You think Elon Musk and the gang over there is throwing softballs so they can beat market expectations? This guy's crazy.
I do think, growth, for companies, it's not all linear. And this is a year, they call it a transition year until we get, the next Model 2 on the road there. At the same time, the energy business is humming. This is something that if we went back, 7 years ago, no one gave any credit to. It now has, good margin, arguably better margin going forward than the auto business and growing at a faster clip. And then, then you start getting into AI. Lots of skepticism around that. But that's good for the setup, to be contrarian around that. But, Tony has said in the past, how are you going to get to these volumes with just the models that are out there? And he was right about that. He asked that on the call, maybe a year ago. But I do think that, for patient investors, there's upside when we start getting to this next model, which will be, a mass market vehicle. And really what Tesla has been working towards, since it was founded.
Yeah, although that's a long time between now and then. I mean, Musk on the call said, hey, I'm overly optimistic oftentimes, and he's still talking about the end of 25. So that's a long way between now and then. I mean, what happens to the stock price?
It doesn't matter what happens to the stock price. Know your role and shut your mouth. If you smell. I'm sorry, I got a little overzealous.
Between here and there, I do think a catalyst could be the compensation plan. Now, we're kind of in a limbo here. I was surprised that no one dug into it when a lot of the call was discussing AI, Optimus, Dojo, but we still haven't ironed out, where Elon is within all of that with the compensation plan. I do think once that gets settled, if it does have the different type of milestones that the past two compensation plans have had, that will be a major catalyst because it'll give investors and us something to track. And by the way, the last two compensation packages, no one thought they were going to hit all those targets. They hit them ahead of schedule. It just shows, how quickly they built the company and how quickly they've evolved.
Ding, 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 ding! Tell him what he's won, Johnny! Your mother. Right. When we're finally able to get Elon's next compensation plan, hopefully it's sometime soon, investors will be able to share the milestones much like they did with the previous compensation packages. But as you know, Tesla has a history of doing the impossible. What does Tesla's board think the company is capable of? What new heights will they push Elon Musk to in order to
pay that man his money?
Let's get something straight. After today's 25-point drubbing, Tesla is out of the Magnificent Seven. Done. Stick a fork in it. We all know it. People are just afraid to say it. Maybe they worry Elon Musk has something up his sleeve, or maybe they're just scared of the guy, or they just like saying Magnificent Seven all the time, although I bet most of the people have never even seen any of the three cinematic iterations. I do not have such trepidation, people. That's because in one earnings report and conference call, Tesla removed itself from this elite group by itself. I think it's a teachable moment about what qualifies a stock to be a member of the Magnificent Seven, which sadly is no more. Let's start with the need for growth. You have to have it. You got to have it to be magnificent. But what did Tesla say last night in its outlook? Quote, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, end quote. You can't stay magnificent with a notably lower growth rate. That's like bringing a knife to a gunfight. And if you remember, the guy with the knife doesn't make it to the end of the movie.
Tesla's not in the Magnificent Seven. I'm cool with that, but what are the other six companies making? Do they make cars? Oh, no, they don't? Forget the fact that Tesla is growing at an unprecedented rate as an automotive company, energy division growing faster than anticipated, on the verge of becoming a leader of robotics and artificial general intelligence. The stock price is down, boot them from the Magnificent Seven, and they have no future prospects. Like I said before, Tesla is unique. It is a unicorn in the stock market that is doing a multitude of things. And as LL Cool J would say, they're doing it and doing it and doing it well. I enjoy the Magnificent Seven as much as the next Western-loving individual, but the next time any individual tries to lump Tesla up with any other company, I'm gonna say, nah fam, Tesla's the Lone Ranger. Or maybe Han Solo. A little futuristic. You can argue about who's the sidekick. In conclusion, it's tough to relive the tape, but there are valuable lessons to be learned here. Tesla's not going to sit there and give you random numbers that they cannot verify. Elon Musk is fond of saying, we don't know that. If you'd like to lend us your crystal ball so we can predict the future outcomes, by all means, hand it over. I'd rather my CEO and the rest of the C-suite be completely honest with me so that I can get an accurate evaluation of what is going to happen in the future. I felt really encouraged by the earnings call. Optimism for the future, tempered expectations for the present. It will take time, blood, tears, sleepless nights, and sweat to get to the next phase of Tesla's growth story. I appreciate the honesty mixed in with the levity. If we're being honest, Dan Ives, the adults have never been in the room in any of the earnings calls. The hard work of everybody at Tesla, persevering despite the adults telling them what they're doing is impossible. Tesla is where it is today because they kept the adults out of the conference call. Now you want them in on the earnings call? Get the out of here. That's all I have for you today. Be easy. Bird.